Welcome back, my beautiful friends. You're listening to a Moment of Zen right here on 710 WOR, the voice of New York, iHeartRadio. I'm your host, Xen Sams. Up next in our Business and Buzz segment, brought to you by Revere Securities, we're featuring Sal Buscemi, CEO and co-founding partner of HRN LLC, which is a private multifamily investment office. And he's also the CEO of Danju Partners Capital Management. Impressively, he's the author of several books on investing. His most recent work, Legacy Investing, How the 0.001% Invest, reveals the concerns, passions, and prejudices of the world's wealthiest families and how that influences their investment decision making. Today, we're chatting generational wealth, leaving a legacy, and investing with a purpose. So, where do rich people get most of their income from? Well, the top 5% of earners get over two-thirds of their income from investments. To build wealth, it's important to invest, stay out of debt, and watch your spending. Capital gains matter way more than you realize. Income sources for those making millions of dollars a year are much different from that of the rest of the American population. And according to information taken from the latest tax returns filed with the IRS, salaries and wages make up about half of the income earned for those making $1 million to $1.5 million. However, salaries and wages make up 83% of the total income earned for those making $30,000 to $40,000. Now, as you might expect, the rich get a larger share of their income from investments than the poor do. In fact, the top 5% of earners get over two-thirds of their income from investment. So the question is, how do you make money like the rich? Well, here to give us insight and depth is the amazing Sal Buscemi. Welcome to the show, superstar.
Thank you. It's great to be here. Thank you, Zen. It's a pleasure and a privilege. Thank you.
Absolutely. Okay, talk to me. What is the key to wealth?
The key to wealth today in American society is investing in businesses. A lot of people have created wealth either through time before or now because we've had this huge explosion in capitalism. We're probably the richest we've ever been since the beginning of humanity, since Genghis Khan. And a lot of people, there's been disproportionate wealth, of course, being moved over to certain parts of income areas that you talked about before. But it's really the wealthy who have been investing in assets, earlier stage companies, commercial real estate, things that appreciate in value, and even media for that matter. Media is an asset today. We were talking about this earlier. And those are the assets that the wealth controls, not necessarily just sitting on an oil well today, like it used to be back in the day. A lot of these people have come up with ideas, and ideas have gone to market faster because there's been a huge disintermediation and democratization of people being able to build wealth with their iPhone literally overnight.
You said it. Exactly. People can literally build wealth overnight with their iPhone, and it's kind of the transition into where we're headed now with Web3, which we'll talk about in a little bit. But overall, becoming a millionaire, it just doesn't happen overnight, right? Only 5%, in fact, attained that feat in less than 10 years. It took the vast majority of millionaires about 28 years to become one. And the average age they hit that milestone was statistically about 49 years old. And then when you look at it a bit further, plus 8 out of 10 millionaires did not receive a dime in inheritance. So that stat shows even further that you don't have to come from a rich family or make lots of money to become a millionaire, to your point. So let's move on. Let's talk about the ultra wealthy. So for the ultra wealthy, rising inflation is in fact playing a big part in how they're going to choose to invest in 2023. But it's as all investors should be. The ultra wealthy are concerned about inflation and looking to preserve assets for this year, specifically this year. What recommendations do you have to hedge against inflation, especially with a potential recession looming?
I think it's an interesting question you bring up. I think a lot of people today, if you're looking at inflation, that is really a political animal, right? And inflation is political; it doesn't grow on trees. The wealthy, though, do get wealthier because of inflation. Think about it: the apartment building that they own goes up in price because of inflation, because of replacement costs, because of other things like that. So the wealthy have their own sort of insular silo, if you will, of wealth as it allows them to benefit from inflation. The people who really get hurt by inflation are the wage earners and the people who make less than $250,000 a year, because those are the ones right now who are not able, even if they're living within their means, it's very difficult for the American family today to save anything or more or less have any sort of discretionary expenses to do things to invest into. And at that point, the mentality becomes entirely desperate because they start investing into things they probably should not have been investing into because they don't understand it or are speculative, and great examples of this would have been the meme stocks over the summer that we saw and some of that, tomfoolery and nonsense that was going on. That's mostly the middle class playing those games, and they're doing that because they want to get rich quick, and sometimes it works and sometimes it doesn't. But as it relates to the ultra wealthy, the 0.001% of society, just about anything they own or hold that is an asset is indexed to inflation. That could be real estate, that could be gold bars, that could be anything you think of. And that's really sort of making them wealthy when you think about it, because inflation floats all boats, but it sort of leaves some people behind too.
Yeah, well, that's a great point. Great hedges against inflation traditionally happen to be, real estate is one, and building and knowing how to build inflation-resistant portfolios is also key for one. To your point, when you talk about real estate,
Yes.
like industrial properties and apartment buildings, when you think of real estate as an example of an investment to hedge against inflation, this isn't just an asset reserved for the rich. So beyond home ownership, real estate investments can be made through, through real estate investment trusts, these REITs that we call them. And I was doing some research, and this show's all about financial literacy, and we trend well in edutainment here. But when you look at a real estate investment trust and you look at it as a whole, it's really it's a company that invests in different kinds of income producing real estate, like shopping centers and condominiums, housing developments, hospitals, parking garages. I don't know anything about that, but now you can buy shares of this REIT in order to get exposure to its real estate investments and have that real estate be part of your investment portfolio without actually managing property yourself. So there's one, when you talk about financial literacy and the path to go, let the experts do their job. I mean, you can invest in publicly traded REITs through any brokerage account. It doesn't take a genius. Fidelity, TD Ameritrade, Robinhood. There's a lot of companies that allow
almost
you
for free.
For free. Yeah. And then there's companies like Fundrise and Yield Street, allow you to buy shares in non-publicly traded REITs on your own through their platform. So it's all about financial literacy. And also, just to point out, we've been calling it REITs, but the terminology is REIT, right? So these are real estate investment trusts. So for edutainment purposes and for Google purposes, if you're going to be researching this, make sure you are putting in the search bar REIT, REIT, real estate investment trusts. I'd like to pick your brain here. Let's touch on and chat a bit about crypto. All right, it's a gray area for a lot of people, but despite all the past drama and uncertainty this year, and despite all the bad actors like FTX who tainted the space, I still came out a winner. Bitcoin is often described as digital gold, and theoretically should protect against inflation because of limited supply. I personally doubled my crypto investments. If you want more control over your crypto and you want to own it directly, there's a ton of platforms like Coinbase. They offer platforms to sell, swap, store, send over 50 types of crypto. Tell me, are you a crypto fan? What's the bottom line? Is this something scary to you? Would you advise against it?
I am not a crypto guy. And the reason for that is because everything that I operate in with the families that I work with, they don't really understand it. And they understand it as a marketplace where you have a lot of speculators going in, kicking the tires, as we saw. But there weren't really any grown-ups, and there wasn't really any sort of centralized sort of SEC around it. And most of the participants were retail mom-and-pop investors. And there were a few institutions, too, who I think were playing along and maybe capturing some spread or some scrape off the top of the less sophisticated investors. I think over time it's going to come into its own. But I also think that it hurt a lot of people because there were a lot of things that they assumed that they had control or protective mechanisms over as far as their investment, like FTX or something, just weren't there. And now we're in the legal exploratory discovery phase of finding out how all of this is going to shake out. And I think some people got scared of it. The other thing with crypto too is that it has a use. It's continually evolving. I don't think you can really put the blockchain away and say we're not going to use it anymore. It's always going to be there, but it's going to come out at some point later. It's just sort of like the natural progression of a new asset class coming to a market, seeing how the retail mom and pop investors play with it before they make it any sort of anything of discernment where the big investment houses start getting into it. You're going to see that now with JP Morgan getting in. Walmart has a huge crypto stake too. And some emerging companies like El Salvador and Africa, I think those are going to be where, if you start to test the strength of crypto as a treasury asset, it's going to be in Africa and Latin America. And it might not look good now, but I think over time it's going to look really good, and there's going to be some benefits of it. But it's just one of those things where you just have to suss it out a little more.
You just captured a whole audience, because there's a lot of people on this platform. We speak primarily to the top 30th percentile of the income distribution, and I'm going to give a big shout out to Kyle Wool, who's currently serving as non-executive chairman at Revere Securities. He's exactly of that mindset that you just described when it comes to cryptocurrency. It's not something that the 0.001% of the ultra wealthy get, understand, or even want to take a bet on. And I don't blame them. It's still in its infancy and it lacks regulation. And when you're talking to a group of people that have pride themselves on regulation to make the money that they've made through sound investments, following the rules of the law, it feels like a bit of a stretch to tell them to just invest in this big black hole that no one seems to really understand, and with lack of regulation, to your point. So thank you for saying that. Now let's chat basic habits that the wealthiest self-made millionaires have really incorporated into their financial life. We know they avoid debt, they buy their cars and plan to keep them long term. They have emergency funds, they invest, they take advantage of everything their employer has to offer if they have an employer. A lot of them don't. They utilize tax deductions. They look for other income streams. They start saving for their kids' college early on. These are all basic things that we always advocate for. Talk to me about what habits you have learned about in interviewing the wealthiest that seem to be the most prominent in practice.
You've talked about everything of financial and transactional value that an average investor look at, but the difference between the 1,000th of the 1% and the wage earners that we were talking about earlier is that they put an inordinate amount of investment capital into their network, into traveling, into going to conferences and meeting people so that they can get into these world-class opportunities where they won't have to be forced to go into crypto. I think, not to bring crypto back, but I think when you have 10 years of low interest rates, that sort of forces people to take risks they shouldn't be taking, right? Because low interest rates is a tax on saving. And if you bring it over towards the opportunities that the wealthy get into, like buying a skyscraper or the ultimate, status symbol, owning a part of a sports team, or real estate, what have you, is that they all network to be able to get there, to be able to invest with other best-in-class investors there. And I think you're starting to see sort of like, and we've started it, and this has been going on for years, but there's going to be, I think, a reflex back to what we call society-based investing, because societies are basically shared values amongst a group of people. That could be religious, that could be, professional, whatever it is. But I think right now where people are going to start spending the smart people spend their time networking. I've seen people spend a lot of time come to conferences. I go to conferences a lot. Your network is your net worth. And in my latest book, I talk about one of the families I know. He's second generation. He spends 227 days on the road around the world in 2019. That's how much his network is, because that influence is more powerful than power.
Wow, that's fantastic that you said that. It's interesting because this is exactly when you look at my life in hindsight. My husband, who's a really successful CEO of Romulus Entertainment, the biggest independent film company right here on the East Coast. They've produced Halle Berry's Bruise directorial debut. They did Fences with Denzel Washington. He executive produced on that. We travel the world on different film sets. We are with a lot of celebrities often. We both have very high profile careers, and you hit it right on. It's networking. It's who's in my phone. My Rolodex is probably more valuable, what we call Rolodex, old school terms, but my Apple contact list, or however where you're storing your data these days, is the most important thing. And it's actually data sovereignty for the original producer. It's also the need to disrupt technocracy and to be able to embrace that and capture your network and be able to use that to your advantage to not only make money, but also evoke positive change in the world, and to be able to really just live on that, leave a legacy. To your point, what's the next thing we all want to do? We want to leave a legacy. Well, this is the way to do it. We are out of time. I almost got cut up in an Oprah's book club moment over there, but I love it. I love everything you're saying. Please come on again.
Absolutely. I would love to, Xen. This has been a great time for me. I really hope your listeners appreciate it.
Insightful stuff. Well, listen, guys, embracing opportunity to pay off debt, save, invest, and learn, all while avoiding potential pitfalls, make a big difference on your ability to build your wealth. Most self-made millionaires started by reducing their debts to increase cash flow and build their rainy day fund, so to speak. Once these are in place, you'll be able to incorporate the other investment habits and really grow your assets. No matter how simple or obvious a money habit may be, the point is that you stick to it. Discipline is key, and with it, you can build the financial future you desire. That was our Business and Buzz segment brought to you by Revere Securities. Do check out Sal Buscemi directly on their website at investinglegacy.com. You're listening to A Moment of Xen right here on 710 WOR, the voice of New York, iHeartRadio. We'll be right back after this.
A Moment of Xen is brought to you by Revere Securities. Revere is committed to building a relationship of trust in which they work closely with you to help you define your objectives, explore alternatives, and choose the financial and investment strategies that are most appropriate for you. Go to reveresecurities.com.